Here's what's on my radar this week. So, employment numbers coming in better than expected. Not too surprising. There's some chatter that we're going to see a negative print next month, given the dynamics of the seasonal impacts on the labor survey. But generally, we were never going to see, all of those jobs come back. And the permanent job loss numbers are actually very, very elevated. And we expect the unemployment rate to remain in the 10% range well through the first part of next year, even though things are starting to open up again. Dr. Fauci was out in the media this week, and he was talking about the efficacy of vaccines, and that very likely before the US election, we are going to get results, not necessarily an approved vaccine, but we're going to get results in efficacy. So the timeline is this. The first person was injected with a vaccine July 27th. The second dose, the last group, is going to be mid-September. Starting in early October, we're going to get some results trickling in, and you're going to see a lot of tape bombs and headline risk. And if you think the market was excited about what if and maybe in phase 1 and phase 2, that's going to be potentially a big positive. Now, could be a big negative if the efficacy numbers are not as good as hoped. But I think where the markets are priced now, close to all-time highs, that's going to be a big challenge if the numbers don't come in very, very well. Now, in terms of the markets, the Nifty 50, the large group of stocks, today they're called the FANGs. If we look at the performance of these year to date, the basket of the top 10 names or so on the S&P 500 that make up almost a third of the index, up 45%, making the market, broadly speaking, look really, really good here. But the average stock still hasn't nearly recovered to where it was pre-COVID, still more than 10% below those levels. And that's the real story underlying the market here. Our bear pick of the week is focused on the ongoing battle between the US and China over world leadership, focused in technology. So you saw the rhetoric amped up on some technology names, and it's Huawei, now it's TikTok, and the list is expanding. And now there's sanctions, specifically on Hong Kong. And Hong Kong listed names. And this battle is going to be measured not in weeks and months, but in decades to come. So it's not going to end anytime soon. And I think the rhetoric is going to be ramped up in the coming months, unless the stock market tells the administration not to do that. But with markets at all-time highs, I think we expect a bit more belligerence out of the White House in that regard. So the short play of the week is KWEB. If you're looking to play emerging market and Chinese in particular, technology names, this is the ETF to own for the bulls. But right now, very overbought. Double top setup with the 2018 high, and the risk return is not attractive, but very attractive for a trading short. KWEB is the short of the week. On the bull side, we're very, very bullish on a reflation trade and inflation coming back. The best way to play that in our mind is through base metal stocks and technology. We saw Trump again ramp up the rhetoric this week by reimposing sanctions on Canadian aluminum. We saw the aluminum names jump. ZMT is a great way to get exposure to aluminum, copper, base metals, nickel, zinc, you name it. These are the companies that are going to benefit most from the rebuilding of the global infrastructure trade that's coming down the pipe in the years to come. That's it for the week. Hope everyone has a good one, folks. Remember, subscribe, hit the button below, and remember to follow the alerts so you know when our latest content is available. Have a great week, everyone. Stay safe.